This is going to be the most important video you watch, because what we are about to show you is undeniable evidence that points to one commodity's shortage, literally tearing apart the markets. This is going to happen within the next year. Due to some foul play by industry insiders and misinformation by the financial media, we believe silver is likely the most undervalued asset available to investors today. Over the past decade, the ETF SLV has siphoned off a significant amount of demand from both the physical silver market and the mining shares themselves. The COMEX has also regularly been used to manipulate the precious metals through margin increases, massive selling during holiday hours, and the fact that the futures market just doesn't have the metal to support all of the trading that goes on. In the end, this is going to be about supply disruption in the face of surging demand for monetary purposes. It is true, silver is used for many industrial purposes: healthcare, pharmaceutical, water treatment, solar, electrical grids, vehicles, phones, computers, bandages, RFID chips, high-tech weaponry, and thousands of everyday uses. But the biggest increase in demand we are seeing is coming from investment demand. On the supply side, silver and many metals and minerals are experiencing serious supply destruction. In a silver-producing country like Canada, silver production is down 31% year over year. The SRS Rocco report just shared new data from the USGS showing silver production in the US is down 20% in September compared to September of 2014. Year to date, Mexico is down 4%, Chile is down 4%, and Australia is down a whopping 41% year to date for silver production. Only 20% of silver comes from primary silver producers. The rest comes from zinc, copper, gold, and other metal mines. This is important because right now we are seeing a situation where primary silver producers are now selling silver for market prices, and in some cases below the cost of production itself. We are already seeing major zinc mines shut down operations this year in Australia and Ireland, with even more planned closures for the next year. Bloomberg recently reported record zinc shortages. In Canada, billion-dollar giant Hudbay in their latest investor conference call literally stated that one of their most profitable mines, the 777 mine, was now approaching the end of its life. This is important to note because even in the face of falling demand, commodity prices can rise if there is a supply shortage. The equation is simple: is supply shrinking faster than demand? However, in silver's case, supply is shrinking dramatically from both future expectations from silver mines, silver exploration, and other metal mines, and demand is soaring due to its monetary history. Here are the raw numbers for total supply for the past 5 years. This includes mine production and recycled silver. Hidden in those numbers is scrap supply, which is in a full-blown collapse. In 2011, 258 million ounces came from scrap. By 2014, the number was down to 168 million ounces, falling 3 consecutive years. Mine supply went from 754 million ounces to 819 million ounces, completely filling that void. However, as of 2015, we can clearly see that the mine supply will begin to fall for silver. At the same point in time, recycled silver continues to fall through the floor. Demand for jewelry, silverware, and industrial fabrication, all of these are still higher than they were in 2010. Where we are seeing a major increase is in coin and bar demand, which has exploded from 87 million ounces in 2009 to 245 million ounces in 2013 and 196 million ounces last year. Unlike many other commodities, silver is not seeing a decrease in demand. It does have a falling supply though, including its future pipeline, where exploration for the most part has been halted industry-wide. With supply tight and future supply shrinking, one only has to wonder if demand will let up in silver, or if what we have seen thus far for its increase in demand will continue, or even see a tsunami of demand in 2016. FutureMoneyTrends.com sees 3 trends in 2016 that will cause a surge in physical demand for silver, which will cause a supply shortage. and present investors and speculators with what will be one of the greatest commodity plays of all time. 1. Low prices. As legendary investor Rick Rule is often heard saying, the cure for low prices is low prices. Physical demand has been surging as silver makes new lows in its current bear market. With the world so bearish on commodities, silver will likely see newer lows in 2016, perhaps to $12, $10, or even as low as $8 an ounce for silver, prior to setting new all-time highs between now and this time next year. At $8 an ounce of silver, you'll have primary silver mines running skeleton crews, and if silver does touch $8, that will mean the other metals and minerals like zinc and copper will be seeing massive layoffs, which in some cases is already starting at current prices. 2. War. War is always inevitable, but in 2016 it may be imminent. China is imploding. Russia needs higher oil prices, and the US monetary fixes since 2009 were all suicidal. And the best distraction from bad policy during an election year is war. We are already seeing skirmishes in the Middle East, and a renewed sense of nationalism and a 9/11 war footing here in the US since San Bernardino and Paris. 3. Bonds. The bond market is twice the size of the stock market, and a real crisis is here, with central banks around the world being the biggest holders of long bonds, and there will be no bids in the debt crisis. Any type of sovereign debt crisis, junk bonds, or corporate will put gold at the top of headlines. And with gold, many investors will buy silver. We already know from bullion companies and the Sprott funds, investors by the ounce buy about 10 ounces of silver for every 1 ounce of gold. So it is safe to say, if investors flee into gold, they will flood into silver, whose supply is much smaller. The above-ground available supply of gold is north of 5 billion ounces. For silver, it is estimated around 1 billion ounces. However, we take the position that coins like the American Eagle are as good as gone, so the number could be far less for silver. The perfect catalyst for silver to roar through the $50 an ounce mark is here, and it is happening in 2016. Demand is surging, supply is contracting, and there are 3 separate but very likely catalysts to bring a renewed wave of demand for silver coming in 2016. Even one of them making a headline could send the price of silver soaring. FutureMoneyTrends.com has just released our 2016 action plan, which includes how we intend to maximize our profits in the silver market. Our 2016 guide includes the top 7 trends we see for 2016, top investments, best asset allocation for income investors, and how to profit from China's economic implosion. We also included the perfect hedge for anyone investing in the resource stocks today, including how to profit from falling silver prices even while maintaining your position for silver prices to rise higher. To receive this free report right now, go to FutureMoneyTrends.com/silver. That's FutureMoneyTrends.com/silver.